Okay, let's get to the first corporate guest on the show. Life insurance companies on our radar today. Brokerage report from Kotak indicates that the tax rate for insurance companies can rise from 14.3% to the normal corporate tax rate, which can, of course, impact the embedded value of these companies by about 7 to 10%. Arijit Basu, Managing Director and CEO of SBI Life Insurance, now joins us. Good morning, Mr. Basu. Well, that is the first question. Is there a likelihood of a larger tax payout that you all have to make? And what will that do to your embedded value?
Good morning. The direct tax code is one of the things which is being contemplated by the government, and they have set up a committee. But as of now, there are no proposals. And I would assume that the committee would decide on what the framework will be. What people are talking about is something which was put out as a draft in 2009-10, where they had proposed that the benefits which are there for the insurance sector can be neutralized or taken forward. So it's very difficult to comment as to what the view of the new committee will be, because we feel that insurance being one of the methods in which we can provide social security, some tax benefits will continue to be there. But having said that, if there is an increase, there could be some impact, but it's very difficult to assess at this moment as to how it will impact the embedded value.
If it was the normal tax rate, then what would it be? If it was like any other corporate, then you have some ballpark percentage number as to what the impact?
We had done some assessment. So currently the corporate tax rate is slated to become 25%. That's the stated objective of the government. So if that were to happen, there would be certainly a pass-through onto the embedded value. But we will also have to relook at the structure of the products, the profitability embedded, and those things could also change. Okay. So it's very difficult to say, barring saying that there would be some impact on not the embedded value, but the embedded value at one point in time, but the way the embedded value would grow over a period of time, I think would not be impacted.
Okay. Mr. Basu, good morning. I have a business-related question now. In terms of new business premium, what kind of numbers have you seen? And in terms of your market share, if you could tell us what kind of growth rate do you expect going forward?
So the current year also continues to be on a very high growth rate for us. We have till November grown at around 45% in the individual segment, and our total individual new business premium itself has been close to 5,000 crores, 4,974. We have seen a 32% growth in renewal premium, which is now close to 7,000 crores. So these numbers are in line with what we were doing in 2015-16 and 16-17. Till the end of the half year, our embedded value also has grown on an annualized basis by 19.5%. And in new business individual premium, we have gained market share of 1.8% to come up to 22% at the end of September. And we are reasonably confident that we will end the year also on this high growth note. And among all the top players with whom we compete, in the private sector, we have grown much faster than any of them.
Okay. Mr. Basu, the IRDAI Committee has recommended that investment norms could be changed. That's their recommendation, of course. Lower mandatory investments in government securities, and probably a slightly higher percentage in equity and property. What's the current breakup, and what do you think is could be a reasonable change that the IRDA may recommend, the IRDA may accept?
That's right. The fact that IRDA is looking at increasing the equity exposure is giving flexibility to life insurance companies, which is a very good thing. As far as SBI Life is concerned, in fact, we don't face a problem because we are well within the limits. As you know, in case of ULIPs, it is the customer's choice.
Yes.
So the amount of equity investment that in the ULIP product, so there out of around 50,000 crores of ULIP AUM that we have, 20,000 crores the customer has chosen to put into equity and 30,000
Mr. Basu,
in debt, which
Mr.
is
Basu,
slightly different from other companies.
No, it's not ULIP.
But as far as
it's not ULIP. Yeah. The mandatory provisions are there for your pension
so
and
the others,
life.
Other products. Yeah, I was just highlighting the ULIP part. So in there, I think the current the limit, there is no specific limit except to say that 50% has to be in AAA rated government securities. So if that comes down to maybe 35, that would be very widely welcomed by the industry. As far as SBI Life is concerned, we are way above those comfort levels. So we tend to put a lot of money in securities, government securities, and so on, because the primary aim of our investment team has always been to make sure that the traditional participating portfolio in the long run is well protected.
Oh, is that
and
the way?
We take we have equity exposure, of course, which would be
No, is that the industry norm? Even if they increase the amount that can be put into equities, most life guys will prefer staying with G-Secs. No, we were only wondering whether a change of rule will mean very different things for the G-Sec market, with yields rising and positives for the equity market. We shouldn't read it that way?
No, I think you should read it that way, because life insurance is a very important player in the market. What I was saying is only about SBI Life. But even for us, if we find that the yields start coming down on the G-Secs and we are we are able to offer a much lower return to the customer, then even we will be inclined to move over to equity products. So as a philosophy or as a principle, I think this is most welcome. And it would depend on the current returns that the company is able to generate from the debt portfolio, which will make them take a call on whether how much they would shift from debt to equity.
Okay. So what kind of growth do you just coming back to that earlier point you made about a 35% growth in new business premiums in the month of November, what kind of growth can we expect, say, over the next few months or so?
Yes, so our growth YTD has been 45 and around 36 in November. So we have projected an overall growth of around 40% in individual segment for the year. So somewhere between 35 and 40, and we are quite confident that we'll be able to achieve our target.
Okay, and you expect single premiums to not attract any more attention? Will that decline as a product?
Yes, for SBI Life, as a conscious policy, we have reduced our single premium significantly in the last 3 years. And for the last 2 years and this year as well, the proportion of single premium is at around 8 to 9% only. Okay. So it's a very small part of our total, much less than any of the other companies.
All right, we'll leave it at that. Arijit Basu, thank you very much for joining us this morning with your outlook on the business. Okay, we've got an exclusive coming your way. Our colleague has this exclusive on this Ujala Maker.